Hi, this is Sean Casey with Trade Canary, and today we're going to look at how to sell an option with ThinkOrSwim. ThinkOrSwim is the free software you can get from Charles Schwab and connect to your Charles Schwab account. It's great software. It has a lot of features. You might be a little overwhelmed, but just stick to the basics to start with, and I think you'll be okay using it. Let's assume that you own an option right now and you want to sell it, or maybe you're looking at how to sell stock options on software that you own in order to generate income, such as call options. Whatever the case may be, I'm going to show you how to sell those options using ThinkOrSwim right now. When you first log into ThinkOrSwim and connect it to your Charles Schwab account, you get into the main screen, and then at the top you can click on Trade. And when you do it, we'll open a screen that looks something like this, depending upon which of these you have expanded or closed. You can click on this little down area to close it or open it. We're going to deal with options, so the option chain is open. You can see right now this is on Intel. Let's say that I wanted to sell an option on NVIDIA that I had. I would type in NVDA for NVIDIA, click on that, it would change to NVIDIA. But the one we're going to focus on right now is Intel. I'm going to click on that. It's going to show me the current market data. The market is now open. These numbers are changing rapidly as the market goes. You can see it's down $1.45 today. The bid, the ask, the stock price, the open, the high, and the low. We can then see that we have a lot of different option chains that are available with different strike prices, and which are these numbers over here, the strike price, different expiration dates. In this case, these are all February because they're grouped by expiration date. And then we can see the different pricing for the different options. You can take your time, go through these at your leisure. One of the great things that ThinkOrSwim does is you can see how this is shaded lighter. This is where the stock option is in the money, because right now it's trading between 25.5 and 26. That means call options are in the money. If you're looking at a put, then it's between 25.5 and 26, because these puts up through 26 or down through 26 are in the money, right? So puts here, calls over here. We can look at all the different strike prices. You can see how many days until expiration, a great reminder so you don't have to do math. Okay, it even tells you that. These are 100 shares per contract options. You can see there's a little green symbol here that says POS. That stands for position, and that's where my current stock option position is with Intel. I own calls, and you can see right now here, I can click on this and it highlights, which is very nice to keep track of. This position right now, the last trade was 275. It's off $1.15 for today. It was as high as 310. The low trade price was 254. The bid currently 278, and the ask is 283. This is the April 17th, 2025 call, and this is for the strike price of $25. Currently, I'm on February 19th. I have about 2 months to go before this option expires, so I don't have to be in a hurry. There's no time pressure, and I have a lot of profit in this position. You can double click on this or right click and see that I can see my trades. And you can see this is where I bought these options on January 31st. It's tracked that I bought 50 of these at 41 cents on average each. So $410 a contract, and, or sorry, it's $4, yeah, $41 a contract, 100 times 41 cents. My current profit and loss right now, if I sold this at the marked price, which is the price in between the bid and the ask, would be $11,916. So I have a lot of choices here. I can sell these outright. I could set a position to protect the downsides if this pulls back further and I don't want to let it come back too far. Let's look at how we do that. Easy way to do this is to right click on my position and I can create a closing order. What makes this so simple is that it tells me I'm going to sell the calls that I already own. I don't have to worry about getting the right ones. And again, when you see that it's red, that means you're going to sell. If I was buying, it would show it as green. So let's go back to sell. I don't have to sell all 50, but I can. I could sell 5, I could sell 1, I could sell 10. This little symbol here means this is the value in units. In this case, it's the option contracts. I could change that to a percent, sell 100% of my position or 50% of my position if I wanted to, or I could sell a specific dollar amount of my position as close to that as possible. I prefer to operate in the actual option contract numbers or share numbers because that's how I personally think, and it makes sense to me. You can change that how you like. You can also change the position effect. For example, I could be selling these to open a position. I'm not, I'm going to close. The system knows automatically how to handle this. So almost always you can just leave this set on auto. I'm closing my position because I own the options now. That has an open position. When I close it, that means I've sold them. Again, I'm selling Intel April 17, 2025 expiration date, $25 strike price. It's a call, and they're going to show the price currently. They default to the the bid price for this limit order. You'll see it keeps changing a little bit as we go along. The order right now defaults to being a limit order, which is always a good thing just to protect you. You could make this a market order, but that means you just get whatever the price is the moment you put in the order, and you can see the numbers keep changing. You don't know what that would be, and normally you don't want to do that. You'd want to at least control and say, I'm willing to sell for $2.81, but I don't want less. I would take more if they got $2.85 because the price jumped up. You would be glad to take more money, correct? We also have some choices. We could create a stop order. A stop order means that the order is not going to be executed or triggered, and you could back this up and say, I don't want to sell unless it backs up to 265 because I'm not ready to sell quite yet, but I don't want it to go down too far, right? I want to protect my profit and leave with a healthy profit. So I could say, look, you get down to 265 as a trading price, it executes at that price, then I will sell at the market and dump out of it. Now, again, at the market, I could get who knows what price if it backs up to that. And maybe that's not something that I want to take as a price. I have a choice as well to do a stop limit. And now I could say, look, I'm going to put in 265 as my stop price that triggers the order, but I want to get at least 263 or maybe 265. Sometimes if you're looking to get out and it's dropping pretty quickly, you need a little room for it to operate and have a chance to actually place the order quickly for you. So a lot of times you want to be just a little bit below that price when you set up this kind of an order. The other thing we could do with either the stop limit or the stop loss order is we could also set it if we wanted to go up to a certain price that we don't want to sell unless we get to, let's say, $4. And then we want to sell at the market, or we want to trigger an order and sell at a specific price on the way up as well. Usually this selling order will be a stop loss, but you can do it the other way. You could also set a trailing stop order. For stocks, this is easier to do. For options, it gets a little wonky sometimes because of the bid and ask spreads between options, especially on lesser traded options. These Intels have a lot of trading, so it's possible to do it here. But I could, for example, put in 20 cents as my trailing amount. And you can do percentages. I'm not even going to try to show that to you just on the screen. It's super confusing. But this percentage means that this order is not active to sell at the market until the price hits the trailing price. And the trailing price in this case is 20 cents below whatever the price is after this. Right now, the last price is $2.80. That I can see up in the screen. See it right here, last price $2.80. And that makes my trailing stop loss trigger at $2.60. But it's trailing, so it moves. If the stock doesn't go up past 280 and it just comes back to 260, that will trigger me to sell at the market. But if it goes up, let's say the option goes from 280 to $3, my stop loss order follows that. It trails that. Now the option is trading at $3. That means my stop order is at $2.80. The option goes to $3.40. The order trails it up, and now the stop is at $3.20. You see how that works? It follows it up. So only when it goes up to a price, then backs down the 20 cents from that price, does this order trigger. And at this point, it would sell at the market when it triggers. I can also set as trailing stop limit order. This will trigger I just talked about trailing 20 cents, but then you can set a limit that you're willing to sell the option for. This, of course, gets funky because when you're creating this order, you don't know where your order is going to get triggered, right? It might get triggered at $3.40. It might get triggered at $2.60 in this case. So you might have to play around to keep track of where your limit is on that kind of an order if you're going to have a trailing stop limit order, but you can do it. And now you know how to do it. You could also just sell at the market on the close at the end of the day. You could say, I want out of here, especially if you're saying, I don't want to hold this over the weekend or overnight, my position. I just want you to sell whatever you can get on the. I could sell a limit order. Either I get my price or better, or I don't, again, at the close. I'm going to just set this as a limit order so that we don't have too many other things to look at right now. And then I have a choice of making this only for today, which is the current trading day. If I was putting this in after hours, this would be for the next trading day. Or I can make this good till canceled. Obviously, this option expires in April. This good till canceled order would then run all the way until the April expiration. Then, of course, by definition, it would cancel itself. I could also cancel this order at any time before it's executed. So I have a lot of options on how I could sell this call option in Intel when I'm ready to do that. Right now, I've set my specific price that I'm willing to sell it for. I'm going to raise this up and say $3 because let's say I'm saying, hey, look, I just want to go up. And if it bounces back up to $3, I'd take it. A lot of things you can do. Again, I don't have to sell all 50. I could sell part of them, lock in some profit, own the rest of these options for free, right? Because I only paid 41 cents for them. They're trading at $2.80. It's a good thing. Whenever I'm ready to place my order, I simply click on confirm and send. It opens up an order confirmation box. You can see, first of all, it's highlighted in red. That means you're selling, which is what we're here to do. And we're going to sell 50 Intel calls, 100 share contracts, April 17, 2025 strike price, the $25 or expiration date, the $2025 strike price, and we're call at $3 limit, good till canceled. And this is closing my open position. It also keeps showing you the action in Intel stock, the underlying stock related to the option. Tells you my break-even stock price is $28 selling at this. That's just because of how their math works. Internally, obviously, I have a profit for where I'm at with this currently. My max profit that I'm locking in is $15,000. My max loss is infinite. That's if I was selling to open a position. And so basically I'm saying I'll be willing to sell the stock at $25 to somebody and I don't own it already. Because I own this stock, I'm closing my position. I don't have a risk of loss from selling it and having to deliver it to somebody because I do own those option contracts already. When this is done, the cost of trade is I get a credit of $15,000 because I'm selling, minus $32.50 and minus $1.11. Those are the commissions and fees. So I get a net of $14,966.39. The buying power effect is minimal, and my resulting buying power for stock and options, once I put this order in, would still be $9,800. Doesn't have a lot of effect on your buying power when you're selling until the actual sale goes through. Then, of course, it would add this $14,966 into my available cash to buy stock or options in this account. If you needed to switch accounts because you're in the wrong account when you went to sell, you could just click the drop-down menu and choose another account. And then you get down here and you have choices. You like this, you click send, which means the order is placed. If you hit send and then you change your mind or something, you want to check something, you go look at the order. You could cancel the order, replace the order. As long as it hasn't been executed, you could save this for future use. I can go back and edit the order, which would drop me right back down to this box right here. Or I can delete the order, and it's if I never did anything. This is how you would sell your options on ThinkOrSwim connected to your Charles Schwab account. I hope this has been helpful to you, and I wish you all the success in your investing.